you're a founder looking at building $1 billion business, this episode is for you. Yes, for you. So stay locked in. Now, when you think of $1 billion business, you think of Amazon, you think of paystack, you think of moniepoint, you think of openai, you think of anthropic, all of these big tech companies. Right? How do they get their funding? Where's all the $1 billion money coming in? It's simple. It's venture capital. So I'll tell you what venture capital is. Hello and welcome to the Also Girl podcast. If you've not seen me before, if you've not heard of me, I am Blessing Chicken, and yes, you're welcome to the space. So glad to have you here. It's always a joy, always a pleasure to speak to you guys. But yes, they'll be moving with a different energy from the usual things that we do. If you're a founder looking at building $1 billion business, this episode is for you. Yes, for you. So here's the gist. I pivoted from journalism to venture capital about 2 years ago. And yes, when I went in tabula rasa, knowing so much about what venture capital is. But within the almost 2 years I spent, I've learned so much, which I want to share with you. Now, when you think of $1 billion business, you think of Amazon, you think of paystack, you think of moniepoint, you think of openai, you think of anthropic, all of these big tech companies. Right? What comes to mind? How do they get their funding? Where's all the $1 billion money coming in? It's simple. It's venture capital. So I'll tell you what venture capital is. So venture capital is basically funding provided to startups that is used to scale and grow their businesses. So this is it. I have this very unique idea, right? That is going to revolutionize the world, right? Like I put it into being a business, right? And providing solutions and making money from it. But yes, I want this to just go beyond the local geography that I run, right? I really want it to be like very massive, global, and all of that. I need funding to make sure that this business goes big, right? What do? I pitch to venture capital. I'm like, oh, I have this brilliant idea that's going to revolutionize femtech, maybe help in providing solutions to menopause, which is like a big thing, right? All women would at a certain stage of their life have to like deal with menopause. So I probably bringing a solution and innovation that's going to help, or endometriosis and stuff like that. And yes, I pitched this idea. I'm like, okay, this is the idea that I have. This is what I'm doing, and this is what I need to help me scale. And the venture capital, like they go do like their due diligence, and they feel, okay, maybe the risk is worth it, and they invest in my business, right? So that is just the whole thing. That's what just goes on. They're investing with the hope that, oh, they're going to get returns at the end of the day, probably when I become a unicorn or when I exit, right? All venture capital look forward to exit. They look forward to the business that they're invested in becoming unicorns, right? So that is like the big idea. That's like the idea about it, and like they invest. And maybe in 3, 4, 5 years, although with AI now, which is like the in thing, we have businesses scaling very fast, right? And making returns at the end, like getting to exit like quicker than we usually used to have. So like, at the end of the day, there's an exit, which can be like a merger, an acquisition, or an IPO, and they get their money back, right? Everybody smiles at the bank. But yes, not all startups excel. 3 in 4 startups fail. So venture capital is basically like high risk, high reward venture. So what this venture capital is they have this fund that they put together, and they invest in similar businesses. So let me just put it in a nutshell for you. So venture capital has to do with a group of investors coming together. This could be like wealthy individuals, corporate investors, institutional investors, putting the money together and saying, yes, we're betting on this startup that is creating this innovation to excel and like to take over the market or lead the market in the next 5 years. And with that, we're going to get returns. It just has to do with this founder having this brilliant idea that is going to revolutionize the world, and he shares this idea to the VCs, and they're like, oh, buy into the idea, and everybody puts in fund then they put in fund to support it with the aim that is going to become something big in the nearest future. So that's what it's about. So the funding for business is coming based off the stage of the business. There's 3 stages: the Series A, the Series B, Series C, and then your exit stage and stuff like that. So for funding, the seeds funding basically it's probably you're still at the infant stage of building, and you're still like maybe starting up. You're still starting up and you need the fund to push it. Probably you need like FDA clearance, if it's like a medtech and stuff like that. You need say if it's Nigeria, maybe NAFDAC approvals or stuff like and things like that to help kickstart this brilliant idea that you have, right, to bring it to life. So that's like the seed stage pre-sale. The funding you get generally climbs as it progresses. But currently we have businesses receiving as much as 2 billion. Say thinking mentioned by Miriam Murati, like women are leading in the space right now, and like that startup got 2 billion in funding for seed stage. That's like huge. Never had that in history, right? So it's like huge. So now we have the Series A. Series A is where you have your product market fit and you have your customer base already, which already building, like it's already a thing, it's already making bond. So you get for that's another stage to raise funding, like for that. For Series B, here you just believe that you have revenue already, like considerable revenue already coming in, and maybe you need to like expand, and then you like seek for funding. Oh, we're already doing this well, but we need to expand to reach out to other people, like to get into other spaces. So for Series E, we believe that this business is already mature and probably running at the global scale, right? It's international reach and all of that, and probably want like a very wider audience. And then from there, you exit, right? Exit is either your merger and acquisition or your IPO. So there's more funding as you progress, more funding as you progress, more funding as you progress. So it's just like that's what venture is all about. Basically supporting these startups. You see, many brilliant ideas would have died if not for venture capital, because sometimes the bank finds it very risky. Sometimes your grants might not be enough. You need like more money to be pumped in. Basically, in a nutshell, venture capital is just investors coming together to bet on companies that are creating solutions, creating innovations that is going to revolutionize how the market is going to run, say in the next next years to come, right? So they're basically catching them young. Like we see this idea early, we get into it early, and then we make profit and everything before other people find that is a big thing. So yeah, so that's it about venture capital for me today. Next time I might be talking about how I got into the venture capital space, but you can just make suggestions of things that you want to hear me say on venture capital. Yes, so I hope that with this you have an idea of how to raise funds for that your $1 billion business that you're thinking of. Till I come your way next time, I remain blessing Chukwuneke, and this is the Hustle Girl Podcast. Bye.